This podcast contains content generated or significantly edited using artificial intelligence tools. All information is provided for general informational purposes only and reflects knowledge available at the time of publication. It does not constitute financial, investment, or legal advice. We recommend that listeners verify the information independently and consult with qualified professionals for personalized advice.
Welcome to the Luxembourg Fundcast.
Okay, let's dive in. Today, we're tackling something pretty central to international finance and compliance, too. The Luxembourg Stock Exchange, the LuxSE, and, well, the whole process of getting securities listed there.
Yeah, it's a big topic. We've waded through a fair bit of material research articles, the actual regulations to kind of boil it down for you.
Exactly. So our mission here is to give you a solid, efficient look at the LuxSE ecosystem. We're talking its purpose, who's involved, the markets, and critically, how you navigate issuing securities. That means digging into the prospectus and the regulatory side.
Right. And we'll definitely touch on some pretty significant recent changes that you really need to have on your radar. We want to cut through the complexity.
And this isn't just theory, is it? If you're in law, finance, governance, compliance, especially if you're touching international capital markets.
Yeah, and understanding Luxembourg is, well, pretty essential. This should help clarify some of the trickier bits and lock in the key takeaways.
Perfect. Let's get started. So, the LuxSE. Why does it exist? Established way back in 1928, what's its core job?
At its heart, it's about bringing people together. It's a central marketplace, connecting issuers who need capital with investors looking for global opportunities. So the simple as that, really. A key piece of market infrastructure.
And it's carved out a real niche globally, hasn't it? Especially in debt.
Oh, absolutely. It's known worldwide as the #1 spot for listing international debt. But, you know, their ambition seems bigger now. Their mission statement talks about transforming finance, making it sustainable by default.
Sustainable by default. That sounds quite proactive, more than just following trends.
It does. It suggests they're actively trying to shape a more responsible financial future. Fits with their motto, always in motion. And look at the Luxembourg Green Exchange, the LGX.
Launched back in 2016?
Yeah, the world's first platform just for sustainable stuff. Green bonds, social bonds. That wasn't just reacting, that was a strategic move.
Yeah.
It attracts certain investors, you know.
Definitely positions them. Okay, that covers the why. Who are the actual players in this ecosystem?
Well, you've got the issuers, first off. It's a really global crowd, maybe around 1,700, from something like 100 countries. Sovereigns, big banks, companies, supranationals.
A real mix.
A real mix. And then on the other side, the investors, also global, looking for those opportunities.
And the exchange itself, is it state-run?
No. It's actually an independent company owned by a mix of Luxembourg-based public and private shareholders, which is kind of an interesting setup, governed by a board and an executive committee.
Right. Now, for our audience, the regulators are key. Who's in charge there?
Okay, this is where Luxembourg is a bit different. The main regulator is the CSSF, Commission de Surveillance du Secteur Financier. They're the ones who approve prospectuses for the main EU-regulated market, and they oversee the whole financial sector.
But there's a twist.
There is. The LuxSE itself also acts as the regulator for its own market, the Euro MTF. This is really important.
So depending on where you list, you might deal with a different regulator, CSSF or LuxSE.
Exactly. Two distinct paths. Listing on the main market, the Bourse de Luxembourg, or BDL, needs CSSF approval. Get that, and you get the European passport, huge benefit for listing elsewhere in the EU.
And the Euro MTF.
That's regulated by LuxSE. Often quicker, maybe more flexible, you deal directly with the exchange. And it's a big, but no European passport.
So flexibility versus passport access, that choice really shapes strategy.
It does. It makes Luxembourg quite attractive because it caters to different needs, speed or EU access.
That's a really crucial distinction. Okay, let's talk about what gets traded, the markets and the securities themselves.
So the main one is the Bourse de Luxembourg, BDL. That's the EU-regulated market. CSSF approved, gets the passport.
Got it. And the other one?
The Euro MTF. It was actually Europe's first exchange-regulated market of its kind, a multilateral trading facility. The key words here are flexibility and speed, with LuxSE doing the approval. But again, no EU passport.
And there's one more, LuxSE.
Ah, yes, the LuxSE, the securities official list. That's more for visibility. You get an official listing, but the securities don't necessarily trade on the exchange. useful for meeting certain requirements, maybe in fund mandates or something.
So different markets for different needs. And while we think of LuxSE for debt, it's broader now.
Well, much broader. Debt is still huge, obviously. But they list equities, lots of funds like UCITES, and increasingly things like security tokens and, of course, sustainable instruments via the LGX.
That LGX seems really central to their identity now.
It really is. Since 2016, it's become the global platform for green social sustainability bonds. They even have the LGX Academy to educate people. It shows a real deep commitment, not just, a label.
And they haven't forgotten smaller investors either.
No, that's where LuxX Prime gets in. It's designed for retail-sized bond trading, helps provide liquidity and accessibility for individuals wanting to trade bonds in smaller chunks, makes the market a bit more democratic, maybe.
So the where is Luxembourg physically, but the reach is truly global, those 100 countries.
Exactly. And initiatives like LGX really put Luxembourg on the map as a hub for sustainable finance, pulling in that ESG-focused money.
Okay, scene set, why, who, what, where. Let's get into the how. The actual process of issuing securities, and right at the heart of that is the prospectus.
Yeah.
So what is this document, fundamentally? Why do we need it? What's the legal bedrock?
The prospectus.
Yeah,
it's the absolute cornerstone. Legally, it's the main disclosure document. It has to give investors all the material info they need to make, an informed decision about the investment. The issuer, the security, the risks, the financials, the offer terms. It's all about investor protection. That's the primary goal stated in the rules.
And the laws behind it. Is it just Luxembourg law?
No, it's layered. You've got the big one at the EU level, the EU prospectus regulation. It applies directly everywhere, sets common standards. And that just got a major update with the EU Listing Act, which started kicking in late 2024.
Okay, so EU-wide rules.
Right. Then Luxembourg has its own prospectus law from 2019. This implements the EU stuff, adds some local details, and importantly, it sets up national rules for smaller offers that fall below the EU thresholds.
So the EU handles the big cross-border stuff, and Luxembourg adds flexibility for smaller local deals.
That's a good way to put it. Consistency for large offers, adaptability for smaller ones.
And who actually signs off on these prospectuses in Luxembourg?
That's the CSSF. For anything under the EU regulation or the national laws needing approval, they are the competent authority.
What's their review like? Just checking boxes?
No, definitely not. They call it an in-depth assessment. They look hard at completeness, sure, but also consistency, comprehensibility. Does it make sense? Is it clear? They really scrutinize it.
But they don't publish it themselves.
Correct. The CSSF approves it, then they delegate the publication task to the LuxSE.
Okay. So CSSF ensures it's compliant. LuxSE gets it out to the market.
Exactly. Plays to each one's strengths.
What absolutely has to be in a prospectus? What are the key sections people need to look for?
The fundamental rule from Article 6 of the EU regulation is all material info. Was material. Enough for that informed assessment. The exact content varies, but standardization is growing thanks to the Listing Act and other rules. But you'll always see core parts. First, the summary. This is key for readability. Short, max 7 pages, non-technical language. It has strict rules, standard sections, max 15 key risks. No cross-referencing allowed in here. It's meant to be a quick, standalone snapshot.
Easy to digest.
Supposed to be, yeah. Then, risk factors. Hugely important. These must be specific to the issuer and the security. No generic boilerplate risks allowed. They need to be described properly, put into categories, and the most important ones highlighted. ESMA has guidelines on this, crucial for investors.
Okay, summary, risks. What else?
Info on the issuer business, management, financials, governance. Info on the securities, the legal stuff, economic features, rights, terms. Then financial information. The Listing Act changed the look-back period here, generally 2 years for equity, 1 for non-equity now, down from 3 and 2. Usually needs to be IFRS or equivalent for the main market. You might see pro formas, and you'll always have a working capital statement.
Where the money's going.
Yep, use of proceeds. Got to be clear about why they're raising the money and what they'll do with it. And a newer section, especially driven by the Listing Act for relevant non-equity. ESG disclosures. If you're marketing your bonds as green or social, you need a specific block explaining how you meet those factors, how you measure it, likely based on upcoming ESMA standards.
So more compliance, but also a way to target ESG investors.
Exactly. It's both.
That's a ton of information. Can issuers point to stuff they've already published to avoid repeating it all?
Yes, that's incorporation by reference. Article 19 of the regulation. You can reference previously published electronic info, makes the document shorter. The Listing Act tweaked how this works too.
Good. Now, is it one size fits all, or are there different types of prospectuses?
Definitely not one size fits all. The rules offer different formats for proportionality, making things easier. You have the standard prospectus single document or split into 3 parts. For regular debt issuance programs, there's the base prospectus. It's valid for 12 months. You issue securities under it using short final terms. Though you can't just add a totally new type of security via supplement to a base prospectus, ESMA's clarified that.
Okay, what about frequent issuers?
They can use a universal registration document, URD. It's like an annual company filing. Once it's approved or reviewed, getting subsequent prospectuses approved is much faster, just 5 working days. The Listing Act made URDs even easier to use, needing only 1 year of prior filing.
And for smaller companies?
There's the EU Growth Prospectus. Tailored for SMEs, less content needed, so lower cost and complexity. And the Listing Act brought in the EU follow-on prospectus for secondary issues streamlined, and crucially, only a 7 working day approval for shares. Huge time saver.
Any others?
There was a temporary EU recovery prospectus post-COVID, and under Luxembourg national law, for deals below the EU thresholds, you might use an alleviated or simplified prospectus, where the CSSF decides what info is needed case by case. The point is, this variety shows a real effort to move away from making everyone use the same massive document. It helps smaller players access markets without hopefully compromising investor protection too much.
Makes sense, tailoring the burden. But are there situations where you don't need a prospectus at all?
Yes, and these exemptions are really important for cutting time and cost. Article 1 of the EU regulation lists them. Key ones are offers only to qualified investors, offers to fewer than 150 people per EU country, or small offers under 1 million total across the EU over 12 months.
And Luxembourg sets its own national thresholds, too.
It does. Under Lux law, you don't need a full EU prospectus for offers under 8 million over 12 months. But if your offer is between 5 million and 8 million, you still need to produce an information note under national rules. The Listing Act actually allowed countries to raise the EU exemption threshold to 12 million, but Luxembourg has kept its €5 national note requirement for now.
Any other common exemptions?
Yeah, a few others. Securities offered in takeovers or mergers, if there's equivalent info out there. Shares issued as replacements without increasing capital. Offers to employees. And a useful one, listing securities that are identical or fungible with ones already listed. The Listing Act increased this threshold. You can now list up to 30% more fungible securities over 12 months without a new prospectus, up from 20%.
Ah, that's a practical change.
Definitely. And it also raised the exemption threshold for certain non-equity securities from banks from 75 million to 150 million over 12 months. So this whole web of exemptions, EU and national, creates a really adaptable system, tries to balance disclosure with practicality.
Okay, so you've figured out you need a prospectus, you've drafted it. How do you actually get it approved by the CSSF? What's that process like?
It's largely digital now. Submissions go electronically to the CSSF, often via their e-prospectuses system. You need the right format searchable PDF usually. The machine-readable stuff is coming. You submit the draft, annexes, checklists, any incorporated documents. And it's often helpful, especially for complex deals, to include a memo explaining things to the reviewer. Language is English, French, or German, plus any needed for passporting.
What's the CSSF's big message on submissions?
Get it right the first time. They really stress submitting a complete near-final document. If it's obviously incomplete or full of placeholders, it just causes delays because the review clock stops and restarts.
Right, the clock. What are those official timelines again?
Article 20 of the regulation sets them. For a standard one, the CSSF has 10 working days to respond. If it's your first time or a new type of security, it's 20 working days. But like I said, if they need more info or changes, that clock resets when you resubmit.
But there are faster tracks?
Yes. If you're using an approved URD, it's down to 5 working days. And that new Listing Act one, the EU follow-on for shares, is super fast, just 7 working days. During that time, they're doing that in-depth assessment, checking completeness, consistency, clarity. They'll send comments back, usually wanting track changes on the resubmission.
So the official times are there, but the real speed depends on your initial quality.
Absolutely. Those timelines are the maximum allowed. A clean submission is the fastest way through, regardless of the official deadline.
Okay, approval granted. But what if something significant happens after approval, but before the offer closes or trading starts? A surprise event.
That triggers the need for a supplement. Article 23. If there's a significant new factor, a material mistake, or a major inaccuracy discovered during that window post-approval, pre-closing trading, you must publish a supplement.
Does the supplement also need CSSF approval?
Yes, it does. You submit it to the CSSF, and they typically approve it within 5 working days.
And investors get protected somehow.
Yes, critically. Investors who subscribed based on the original prospectus get a right of withdrawal. They have 3 working days after the supplement is published to pull out, provided the event happened before the offer technically closed. It protects them from being stuck based on old info. ESMA has guidelines on this, especially clarifying when a change is so big you need a whole new prospectus instead of just a supplement.
Got it. So, approved, maybe supplemented. How does it get out to the public?
Publication. It has to be public before the offer starts or trading begins, mainly electronic. It needs to be on the issuer's website, the offerer's site if different, any financial intermediary sites, and the LuxMA website.
Specific format.
Yeah, downloadable, printable, searchable PDFs, free access, no logins, no tricky disclaimers trying to limit liability.
And LuxSE handles the official bit.
In Luxembourg, yes. The CSSF delegates the official publication task to LuxMA. They also notify ESMA, so it goes on the central EU register. And these docs have to stay public for at least 10 years.
What about ads or marketing materials?
They have to clearly state that a prospectus is available and where to find it. And of course, ads must be accurate, consistent with the prospectus, and not misleading. It's all about transparency, but it means keeping track across different channels.
Okay. The prospectus is done and dusted, but surely there's more paperwork involved in the actual listing process with LuxSE.
Oh, for sure. The prospectus approval is mainly CSSF for the regulated market. Listing with LuxSE is its own process. You need a formal listing application form submitted to them. And a really important one is the letter of undertaking. That's the issuer promising LuxSE. They'll follow the ongoing listing rules. It shows it's a relationship, not just a transaction. Then you need internal corporate authorizations, board minutes, shareholder approvals, that sort of thing.
Proof the company actually agreed to do this. What about external checks?
Definitely. Legal opinions from the lawyers involved, confirming everything's above board, due diligence done, securities valid. If it's underwritten, the underwriting agreement with the banks is key. The company's articles of association need to be checked to ensure they allow this type of security, especially if it's dematerialized. And, naturally, audited financial statements meeting the required standards.
So who are all the people around the table making this happen, and is there much negotiation?
You've got the issuer, obviously, then often underwriters or lead managers, the legal advisors, usually separate ones for the issuer, the underwriters, and the auditors. Negotiation isn't really about bargaining on disclosure rules, those are fixed. It's more about meticulous verification, ensuring everyone agrees on the facts, the risks, the wording, managing liability. The intense discussions are usually around the prospectus content, presentation, risk factors, accuracy, the due diligence, what was checked, what did it find, underwriting terms, if it's that kind of deal, and managing the timetable. It's a massive coordination effort between all these parties. Project management, really.
And it all costs money. What are the official fees, and what are the other, perhaps bigger costs?
Right, the official fees first. CSSF prospectus approval. For shares, it's based on the offer size, seems to range from about $25K up to $220K. For debt, it's a flat fee, around 5,700 trays. Then LuxSE fees, there's an admission fee for listing, often based on value, and then ongoing annual maintenance fees. For bonds, the annual fee looks like 500 to 900 euros. For shares, it varies more, maybe 650 up to 5,250 total line, depending.
Any ongoing CSSF costs?
Yes. If Luxembourg is your home member state for transparency rules, annual fees apply. For large denomination debt, it's €2,000 a year. For shares, it's €30,000 plus a bit more based on market cap for bigger companies.
Yeah.
These are official figures. But then you have the implied costs. That's the big one, really. The fees for the lawyers, the auditors, the financial advisors, the underwriters. These aren't set by the regulators, but they add up significantly. The official fees have a sort of logic. Bigger deals, more complex structures pay more. But the professional service costs are a major factor.
It's a serious investment then. So putting it all together, what does the timeline look like, roughly, from go to trading?
It breaks down into phases, but the total time really depends on how prepared the issuer is. Phase 1 is preparation. Deciding to go ahead, hiring advisors, doing due diligence, drafting everything, getting financials sorted. This is all on the issuer's team. Could be quick, could take months. Phase 2, regulatory approval. Sending the draft prospectus to CSSF or LuxSE for Euro MTF. Then the back and forth comments, revisions, resubmissions. This is where those official timelines kick in, 10, 25, or 7 working days. But remember, the clock restarts if they need changes. Phase 3, offering marketing, if it's public. Once a prospectus is approved, you market it, build the book, set the price. Phase 4, listing admission. formal application to LuxSE, their decision, settlement happens, and then ding, 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 first trading day. LuxSE is known for being pretty efficient, especially for debt. But honestly, the biggest variable is Phase 1 and the quality of the documents into the CSSF in Phase 2. Good prep saves huge amounts of time later.
Right. So getting listed isn't the end of the story. It actually triggers a whole set of ongoing responsibilities, doesn't it? What are the main ones?
Absolutely. Once you're listed, especially on the regulated market, you're under ongoing scrutiny. The two big areas are transparency and market abuse. Transparency rules come from the EU directive, implemented in Lux law, mostly applied to the BDL, the EU regulated market.
What kind of stuff needs to be transparent?
Several key things. Annual financial reports within 4 months. Audited management report, responsibility statements, needs to be in that electronic ESEF XBRL format now, public for 10 years. Half-yearly reports, too, within 3 months, also public for 10 years. Disclosure of major holdings when big shareholders cross thresholds like 5%, 10%, etc. They tell the issuer in CSSF, and the issuer tells the market. Similar rules for disclosing the issuer's own shareholdings and any other ongoing information that could affect shareholder rights. All this has to be disseminated fast, fairly, usually via an official channel like LuxSE's OAM system, and filed with the CSSF. And a huge new piece, which the CSSF is focusing on, is sustainability reporting under CSRD ESRS. That's becoming part of the annual report. It's a massive expansion beyond just financials.
Okay. Transparency keeps investors informed.
Yeah.
What about market abuse?
That's about keeping the market fair. It's governed by the EU Market Abuse Regulation, MAR, plus Lux law. The aim is integrity, confidence, stopping insider dealing, unlawful disclosure, manipulation.
Does MAR just cover the main market?
No, crucially, MAR applies very broadly. Regulated markets like BDL, yes, but also MTFs like the Euro MTF, other trading facilities, and even some off-market trades if they relate to listed instruments. It blankets most trading activity.
So what does it actually forbid, and what does it require issuers to do?
The main prohibitions are insider dealing, trading, or tipping someone off based on non-public, price-sensitive info, unlawful disclosure, leaking that inside info improperly, and market manipulation, creating false impressions of trading, rigging prices, spreading false rumors. The main obligations for issuers are public disclosure, inside information, tell the market ASAP. Delay is possible only under strict conditions, and you have to tell the CSSF why you delayed. Maintaining insider lists, track everyone who has inside info, keep it updated, ready for the CSSF. Reporting managers' transactions, senior managers, PDMRs, and people close to them, PCAs, have to report their trades above a threshold, and the issuer discloses these. And there are strict rules around market soundings, how you can legitimately share inside info to gauge interest before a deal. Complying with MA requires really robust internal controls, policies, training. It's a heavy compliance burden. The CSSF has strong powers to investigate and sanction breaches. You don't want to get MA wrong.
Shifting gears a bit, Luxembourg's been very active in the digital asset space, adapting its laws for things like DLT. How did that evolve?
It started back in 2013 with the law on dematerialized securities. That basically said securities can exist just as electronic book entries, no paper needed.
Yeah.
Issuers needed specific wording in their articles for this. Initially, the accounts holding these could only be with settlement systems or central account keepers.
And then came the specific blockchain laws.
Exactly. They did a step-by-step building legal certainty. Blockchain 1, 2019, confirmed that the accounts holding securities could use DLT, focused on circulation, transfer. Blockchain 2, 2021, went further, allowing the issuance accounts themselves to be on DLT. So securities could be born digital on a blockchain. It also expanded who could be a central account keeper for DLT stuff. Blockchain 3, 2023, brought the EU DLT pilot regime into Lux law and confirmed DLT-issued instruments under the pilot are financial instruments. And the latest, Blockchain 5, 2024, introduced this new optional role, the control agent.
A control agent? What's that?
It's an entity like an investment firm or bank that can manage the DLT issuance account. They monitor ownership on the DLT, handle reconciliation. It's an alternative to the traditional central account keeper model, specifically for DLT issuance. Needs CSSF notification.
So it's like a regulated DLT bookkeeper?
Kind of, yeah. It tries to bridge the gap, providing a regulated way to manage ownership records directly on DLT. This whole ITF4 sequence shows Luxembourg trying to carefully build a solid legal framework for digital securities.
Interesting. Okay, looking ahead, apart from DLT, what other big regulatory shifts are happening or coming soon that issuers absolutely need to track?
The EU Listing Act is the immediate big one. Those reforms started phasing in from late 2024, aimed at making EU markets more attractive, especially for SMEs. We've mentioned some key bits: faster prospectus approvals for follow-ons, higher exemption thresholds, standardized content, the ESG block, easier URD use. It's a broad package designed to reduce friction.
And a major plumbing change is on the horizon, too.
Yes, the move to T+1 settlement. Shortening the settlement cycle from 2 days after trade to just one. ESMA wants it done EU-wide by October 2027. The CSSF is already telling firms in Luxembourg to get ready. It sounds simple, but it requires huge operational and tech changes across the board: trading, clearing, settlement, custody. Big investment needed.
And regulatory guidance never stops, does it?
Never. There's a constant flow of ongoing CSSF and ESMA guidance. Circulars, FAQs from CSSF, Q&As, guidelines, technical standards from ESMA. These constantly clarify how rules apply in practice. Key areas right now are sustainable finance rules, DLT implementation details, and market abuse enforcement. Keeping up requires constant monitoring and resources. You can't just read the main law and stop.
So with all these changes swirling Listing Act, DLT laws, ESG focus, what does this mean for the actual documents issuers use day to day? The templates, the standard forms?
It means hitting refresh on a lot of them. Significant review and updates are needed. Prospectuses, definitely. The Listing Act alone forces changes to exemptions, the follow-on format, URDs, the ESG block. If you're issuing on DLT, you need to reflect the DLT laws, maybe mention the control agent role. And the ESG pressure from SFDR, CSRD, means more detailed sustainability info, either directly in the prospectus or via incorporated annual reports.
And it's not just the prospectus.
No, other key documents too. Articles of association might need amending for dematerialized DLT issuance or the control agent, maybe new share types. Internal policies and procedures are huge. Updating MAR compliance manuals, handling inside info lists, PDMR trades, soundings, updating transparency procedures for reporting, major holdings, and now weaving in that detailed CSR, DESRS sustainability data, plus new operational procedures if you're dealing with DLT. So it touches everything. Prospectus templates, final terms, supplements, the annual and half-yearly reports, articles, internal compliance manuals. You really need to talk to your advisors to make sure all your documentation stays current and compliant. It's not static.
Okay, let's try and wrap this up. We've seen LuxSE as this global powerhouse, especially for debt, but also a real pioneer in sustainable finance with LGX. The issuance process hinges on that prospectus, governed by EU and Lux law, with the CSSF as the key gatekeeper, while LuxSE handles its own Euro MTF. And we've stressed how recent changes, the Listing Act, DLT laws, the looming T+1 shift, are really reshaping the landscape.
Right. And building on that, particularly Luxembourg's work on DLT laws, creating specific roles like this control agent, it makes you wonder, doesn't it? Is this pointing towards a future where securities, custody, and issuance fundamentally change? Could these new legal structures potentially bypass or seriously transform the roles of traditional banks and custodians in the long run? Something provocative to think about, perhaps.
That is a really interesting thought. Are we seeing the legal seeds of a very different financial infrastructure? Definitely food for thought. Let us know your views. Hit that like and subscribe button. It was the Luxembourg Fundcast for you today. This podcast contains content generated or significantly edited using artificial intelligence tools. All information is provided for general informational purposes only and reflects knowledge available at the time of publication. It does not constitute financial, investment, or legal advice. We recommend that listeners verify the information independently and consult with qualified professionals for personalized advice.